Hey guys, what's going on? So this is Juan Rojas with JPR International Real Estate. I'm the broker, and I am today with Jose Mata from Point Mortgage Doral, who I've known for I think for 10 years or more, 10, 12 years probably, like, a long time. Anyway, Jose, thank you for having a conversation with us.
Thank you, Juan. Thank you for the invitation. And like you said, we know each other for a long time and working together for a long time. And we have developed this, connection, working together, understanding the business, which I understand what you do, but you make it seem easy sometimes, not sometimes, every time actually have a transaction, but you understand, how to explain the agents, the buyers, the whole concept of offers. And I love working with you guys because you make it look easy.
Okay, good. Thank you. And likewise, the same, same thing with you. For anyone that's, who's watching this, by the way, I know that there's a lot of mortgage brokers and lenders. And of course, if you happen to know of somebody that you like, that you trust 100%, then you're happy, go ahead and work with them. If you don't, you can definitely, we'll have Jose's contact information. And the reason like I reach out to Jose probably once a week or so is for his insights. And the reason that I trust Jose is that so far, knock on wood, no pressure, so far he hasn't dropped the ball. Every single deal, every single buyer that he has pre-approved has closed. And in this business, that's important. Now, some things are outside of his control, which again, so far, we've been good. But the reason I thought it would be important to have a conversation, especially today, is that we're in the middle of a coronavirus pandemic, right? A lot of people are fearful. Interest rates, mortgages, can I get a mortgage? Do I qualify? Do I not qualify? What's going on? Is the market going to crash? And so, all these questions. So, Jose, first of all, let's start with interest rates today. As of the recording of this video, which is April 30th, 2020, what's the story with interest rates right now? Historically speaking, where are they? Up, down? What's your
Juan, we actually all-time lows. The Fed actually came out yesterday that they're gonna keep the prime rate at zero. So that means also our mortgage bonds are gonna, they're working sideways. They're actually, they're gonna maintain the mortgage rates low as well to continue stimulating the economy, especially in the real estate market, what we do, and mortgages. So from the past, I say 4 weeks, the mortgage rate has maintained very low, especially on conventional financing. There's people that are refinancing, that are taking advantage to, remove the mortgage insurance or lower the payment or structuring their debt. Maybe they have some high interest rate credit card that they want to include to be able to have one monthly payment. And right now you have to save as much as possible. So people are taking advantage, and whoever's looking to buy now, I think it's a great time to do it because rates are all time low at 3.25, 3.375, 3.5. So, I mean, even 3%. I mean, obviously that depends on your credit and you're in the program, but right now interest rates are very attractive. They're very good.
Okay, awesome. Sounds good. Now, let me ask you, and because these things change so quickly, what is it that, based on your experience, from your perspective, when you say that interest rates are expected to stay low, what are we talking about? At least 1 month, 2 months, 3 months?
I mean, so far, it's going to continue. It all depends, when we come out of this, of the COVID-19. They don't want the economy to go down. Obviously, we're going through changes, and I know a lot of people have lost their jobs, and I know a lot of people are not getting enough income. And yes, they're trying to help as much as possible. And this is something unexpected that it just happened to us. One day we were just at an office working what we do every day, and next thing you know, we're home. And people started losing their jobs, especially the service business, hospitality. But at the same time, we don't want to go back to 2008, that the economy crashed. A lot of people, it was actually a disaster. The government trying to protect that. So they want to keep the interest rate as low. I mean, I could say probably later on, once we get back up and the economy is doing great, then gradually they're going to start going back up. So maybe it could take another 90 days. So That's what I'm saying. Whoever has a chance now to refinance or purchase, this is the time to do it. You could probably negotiate better in your purchase price when you're out there.
Well, I mean, I was looking at a chart just yesterday, and there was, it was a chart of the interest rates historically speaking, and I mean, literally in the last 50 years, this is absolutely the lowest time, the lowest the interest rates have been, and even like just in the last 18 months, the interest rates, if you were to look at a chart, 18 months ago, the interest rates were here, and today they're here. I mean, they're significantly lower, right?
Yes, no, no, yes, and it's a good thing because I mean we have to continue stimulating our real estate market. Get that, real estate market, believe it or not, once when there's closings, it creates jobs. It maintains where you're buying the neighborhood.
Totally.
It maintains it very healthy. That's why our market, Miami-Dade and Broward, it has come up in value since 2009, since the last crash. When the prices were very low, people started buying again using FHA financing, conventional, and this fast forward 2020, we actually did pretty well. We, right now COVID-19 happened, and we are adjusting. We're coming in, we're shifting. So we're trying to make the market not to go back to what happened before. And I don't think it's not going to happen like that. It's not going to crash. I mean, I hear the news, economy's going to crash. I mean, we're going through a process, and yes, some people might feel it as a recession, but there's some people that can, in any crisis, some people take advantage, to be able to buy their own home, or be able to refinance and have lower payments, and be able to, lower their debt, to be able to have lower debt, which is bottom line. People are learning now that, hey, right now you have to save money. You cannot have this debt lingering, following you. Or let me go get that $1,000 payment now, because you know what? You're realizing that when you're financially well and something happened to you, those things don't matter anymore, right? What matters now? Family, your business, your job. You value that even more than let me go get that, $10,000 vacation, or let me get that porch. Yeah, that's good. But if you could afford it with your investments and your cash flow, not with your income, because your income, when it stops, all hell break loose. We see it,
Totally.
so.
Totally. It's that's so true. Let me ask you a question. So, one of the questions that I get, of course, I mean, especially in the last 4 to 6 weeks, right, is not so much a question, but more of a concern, right? Hey, Juan, I'm afraid that the properties are that the prices are going to crash, and we don't think that they're going to crash. There may be an adjustment, but we'll talk about that later. But what I remind people about the context of the real estate market in South Florida and the whole United States, but specifically in South Florida, like Dade and Broward, is that for the last 10 years, half of all sales were cash, and that the other half of all sales were bought with financing.
Right.
And so what I remind them is that all those people who bought with financing in the last 10 years um, had to jump through some hoops, right?
Yeah,
It
no, no, of course.
wasn't like like pre 2008, right? So could you talk a little bit about the difference between getting a loan in 2006 versus, let's say, 2013?
Well, '06, we were still in the boom era when everything was stated, no doc, no ratio, just exotic loans that you
What
didn't
is
really have.
sorry to interrupt you, but for the people who don't know, who aren't familiar, what are stated loans? What are those the so-called ninja loans? What are those?
Well, see, back then those loans were, you didn't have to verify, the income, like with a pay stub, or with everything was like, okay, whatever you had on the application, whatever you had on the asset application. Sometimes there were stated income you didn't verify, but you have to verify the assets. Sometimes you didn't have to, because that's what the program guideline gave you. So it was designed to, hey, real estate is the new. It was a bubble. It was something that people started taking advantage, and people had good credit, so everything was leveraged. Nothing, no one had a skin in the game. It was 100% financing, 80-20, which is one loan was 80% and the second loan was 20%. So it was combined loan to value, 100% financing. So imagine if you have those type of programs, how many people took advantage of that? Buyers, sellers, investors. So we were on a boom. The next thing you know, it couldn't sustain it anymore. So when equities went down value, then the market couldn't sustain it anymore. There was no liquidity to be able to sustain that, and it was so much debt. That's why the crash was inevitable, and it happened. So
Mhm.
now, 2013, then we were working with FHA financing and conventional. There was only those two programs that came in and was saving the market. That new wave of first-time home buyer that didn't buy with those loans that it was not verifiable, So you have to verify your income. Prices were lower back then. So if whoever purchased in 2013 obviously bought a home that has plenty of equity.
Today.
So, but you have to go through hoops. Yeah, in 2013, you have to document your income, your credit. You have to have letter of explanation why you deposit this much. Who gave you this gift. I mean, everything was over documented because we didn't want to go back to the happen in that era. So yes, people jump through hoops, and I told them from the very beginning, it's a tedious process, but we're gonna make it look easy. Some files were hard, but you know what? We live and learn. And right now, fast forward 2020, guidelines were getting better, loosened up, but that you have to keep it that way. You cannot go back to stated loans, stated income, no doc. No doc means nothing in the application. I was like, what? What is this? It's crazy, but I don't want to go back to that. I want to make it. I want someone that would qualify, that could make the mortgage payment. Because you know what happening now, Juan? Right now, there's people having trouble making the mortgage payment, and they're applying for mortgage forbearance, mortgage relief right now. People that qualify are probably applying to this mortgage relief now. But sometimes, if you can't do it, you can't do it because maybe you lost your job, you don't have enough income, you have to do it. But there's people that could pay the mortgage payment, and they're applying to that. So the government is not regulating who has to apply. But if they don't read the fine prints when they close the bank and they say, yes, go ahead, don't pay into August, but what happens after? Do you have to pay for it one lump sum?
Yeah,
Are
totally.
they going to extend your mortgage? Is it going to affect your credit? It's going to affect, if you're going to affect to buy a home again or refinance. People have to understand that nothing is free. Nothing is free. Nothing's going to be given to you. Say you don't have to pay for it. Read the fine print, call your services, call your bank, and find out if you're able to do it. Because if you could pay your mortgage, do it. Just
Right.
do it. It's going to help you down the line later.
Yeah, 100%. So, it's funny. So, going back to the sort of the current state of the real estate market when it comes to the financing, the financials, and what I call like the fundamentals of the real estate market, right? Because I think a lot of people, they'll turn on CNN or Fox News or ABC or NPR, or I mean, pick your flavor. It doesn't matter, right? And so if you're only looking at the headlines, which let's face it, we all do, right? If we're looking at the headlines only, then the first thing that comes to mind is, oh my God, the economy is like, it's just gonna die, right? Like, how could real estate prices not come down if the stock market crashed 40%, if oil prices, went negative, right? So how is it possible that the real estate market won't crash, right? And so again, I always go back to the context of where we are today, right? That in the last 10 years, half of all sales were cash. I mean, people, buying a property for $20,000 in cash or $20 million in cash. It was just cash. So those people are not going to go into foreclosure anytime soon because they own the properties free and clear.
Right.
And we see the reports we can see which properties have no mortgage. We can see which properties have 20, 80% equity, right? Because wholesale markets to those people as well. We market as realtors, we market to those people. So wholesale knows that this particular segment of the market is likely going to refinance, right? Like
Right.
that's, for anyone who's watching this, that's information that we have access to. So we see the numbers. But the other 50% of the people needed to finance. And so they came in with a down payment, and they had to prove and jump through hoops with what I always say is it was basically everything short of a blood sample to be able to get a loan. And those people are also not likely to simply let their house go into foreclosure. Would you
That's
agree
true.
with that?
Oh yeah, 100%, 100%. And I think yeah, the people that are financing homes, and they started doing it obviously after 2009, 2010. They actually value, they appreciate, that hey, this is our home now, and we're not gonna let this go. Why? Because now you're appreciating all the steps that you have to do to get a home and to get financing. And when you said our market became so hot that there was a lot of cash buyers, a lot of international money, and a lot of investors from up north that started buying a lot of properties cash. So it hurt also the homeowners, the home buyers that were using financing. They're competing, submitting an offer. Oh, I want this foreclosure property, the one is short sale. But hey, guess what? Last minute a cash deal came in and they missed out. I went through that
Totally.
process too, because those buyers, I had them approved, I had them financed, they're excited. And we went through so many calls, so many offers, because there was a lot of cash money in the United States, especially Miami, buying condos, buying, going to developers, buying homes, 10 houses, 5 houses. Now, actually, after the international money kind of slowed down, then the financing came back again. But obviously, the prices are higher. Remember that cash market pushed our value higher.
Right.
So now the buyer who's going to finance, they have to qualify, and they have to have obviously their income and their credit, and we want to make sure that they're able to make the mortgage payment. And now that mortgage payment is higher. It's,
Right.
that property is no longer 200,000 like it used to be, 7 years ago. That property is probably 350, 400,000, or 500,000,
Right.
whatever is available. Because remember, the single family homes in Miami, they're no longer 300,000,
Right.
barely 350. So you
Yeah,
have to
they've gone up. Yeah,
they
they've
gone
gone
up
up. They've gone up
because
quite a
of
bit.
the activity that we've been having since the past 10 years. So now the home buyer, the first time home buyer, really have to look into, if I'm gonna buy in Kendall, this is my monthly payment. If I'm gonna buy in Homestead, this is the type of house that I'm buying. This is my monthly payment. If I'm gonna go to Broward, so the home buyer have to. They're savvy now. They're going online. They're doing their numbers. Now, is when you have a conversation with a buyer and he's using financing, they have an understanding what they're getting into now. And that's what you and I do. We educate and we say, hey, these are your payments with mortgage, taxes, and insurance. And it doesn't matter if you put 3%, 5% down, it's whatever you're gonna feel comfortable paying a month. It's the most important part. So yeah.
Totally. Yeah, I mean, there's so much to talk about. Let me ask you a question. Today, what are let's start with this. In terms of the range of credit scores, what is the typically, and I know it varies per program, but generally speaking, what is the lowest credit score that somebody could buy a property with?
Yeah, I mean the lowest one, like let's give an example. FHA.
Mhm.
Yesterday they came back, there's some lenders that say, well, we're gonna start doing 580 credit score. There's some lenders that, hey, we're gonna do 620, and there are some lenders that are gonna do 640. But FHA doesn't have a minimum credit score.
Oh,
It
okay.
all depends on the lender. It's FHA gives you the guidelines, and they say, hey, you could do a loan with 500 credit score, but they're gonna have to put a higher down payment.
Okay.
They're gonna ask for reserve. The qualification is gonna be strict. It's gonna be like, hey, you're gonna have to go to Mars and come back and bring me a sample or give me a. But yes, I mean, it have to be that way. You can't lend blindly and say, oh, you have a 580, yeah, come get it home. You have to analyze who's who, and if they're able to make the mortgage payment. Remember, we don't want to go back to mortgage default, short sale, foreclosure. A lot of people take advantage of that, but I like to prevent that. I like to be able to, hey, continue making your mortgage payment, less lend responsible. But yeah, you could go up, 580 credit score, 620, 640.
Got it.
Analyze, who's who. If they have reserve, if they have no reserve at 580, and they're kind of okay with their debt. Find out why they got to that. Why the credit so low.
Got it.
Let's. Some people don't have no idea why the credit is so low, so you have to educate.
Yeah, I think 100%. I think, yeah, a big part of this, a big part of what we do for anyone who's watching this is really educating our customers. I would say at least 50%, like more than half of my time is spent is educating buyers and sellers about the process, about the market, about what's possible, about what's not possible. frankly, sometimes we had a conversation, I think about a month ago, maybe, where I was talking to you about a particular client, and I said, listen, I don't think that she should be buying. And you told me the same thing. You were like, I don't think she should be buying either. Now, this particular buyer was very eager to buy, very excited to buy. She definitely wanted to buy a house. But if we had helped her buy it, I mean, to be completely honest, if we had helped her buy today, she would be going to foreclosure.
Oh yeah, 100%.
You know, so that makes no sense at all. So I think, most of the time when we talk about financing somebody and or getting them pre-approved, it's not about making it difficult for the customer, but it's about really making sure that in fact they can afford that monthly payment. If somebody can afford a $2,000 monthly payment easily, then great, no problem. If somebody can afford a $5,000 monthly payment, fantastic. But if what your budget is based on your finances, on your income, on your debt, your car payment, your student loan payment, your other stuff, which Jose, is the one who analyzes that. If Jose says, listen, the most you can afford is $1,500 a month, then trust us, that's for your own good.
Yes.
Because
Oh,
because
yeah.
otherwise you just end up in a situation where anything happens, like the wind blows the wrong way, and you're going straight into foreclosure.
Oh yeah. No, and you said it correctly. I mean, and people have that eager, like, oh, I want to buy, I want to buy, I want to buy. But and I'm doing a lot of Zoom, buyers consultation, which is a lot easier now because I'm able to share numbers, sharing screen.
Totally.
And say, hey, if you're looking for that 285 on a home and you're giving 3% or 3.5% down, these are your payments. I want them to see it. So they can look at reality and say, you know what? If I'm the only income coming in and I have kids and I have utilities and I have monthly debt, if I get into the mortgage payment, then something happens. I get a flat tire or COVID-19 came in. Guess what you're going to do? You're going to take care of, your family first. And then you're going to be like, hey, to hell with this. I'm not going to pay for this now. Your automobile, your mortgage, anything that you have that is a burden to your financing, that's the first thing that goes. And yes, some people get mad at me. Oh, but you don't want to help me. No, I want to help you. Believe me, I want to help you. I want to help you for you to be a homeowner. But why don't we do this? Why don't you pay off down this debt that probably you don't need anymore? What's happening with your spouse? Are they gonna? Yeah, well, she's gonna get to work later. Okay, let's wait for that. Let's get another income for anything that can happen, because you never know. Believe some people have called me back and say, you know what? Thank you for that advice. Some people take it well. Some people take it, they take it bad. But I'm here to help them. I'm not here to hurt you. I'm here to give them the right advice. Some people come back a year later. Hey, Jose, I'm ready. I'm getting paid more. My credit got better. I'm able to qualify right now. Some people come back to me a year later and say, and when I look at it, say, you ready to go?
Right.
That's our job to follow up, obviously. But there's people later that they work on their finances, get educating credit, income, and buying. You have to know that you cannot just buy with your heart, because maybe your neighbor or your family member bought a home and you have to be next. You don't have to prove to someone, no one, that you're a homeowner. I rented for a long time. When I was in the business, I purchased my first home 6 years later. Mm-hmm. When I was closing loans, when I was already doing good, had momentum, I didn't buy right away. I waited. So let me save my money, let me have reserve, and then I'll buy.
Right.
I think that happened in 2011 when that was the year I got married and bought a home. But awesome. We waited. I didn't want to be I didn't want to be a statistic. I didn't want to have an early payment default. I didn't want to do that.
It's funny that you say that. So let me ask you this. Well, I guess let's some quick questions. Yes. Are lenders still lending today?
Yes. Oh yes.
Yes. Okay.
Yes.
So if somebody still has a job, can prove their income, has decent credit, let's say 600 plus, right? They have savings. Lenders are still lending to those people.
Yes. Oh yeah. Yeah. We are lending. We are closing. Obviously, I mean, maybe some mortgage company are having a hard time. Maybe they're the warehouse lines, or maybe the investors, are backing out. It all depends what type of portfolio loans are they buying, and whatever that, because remember, if you close a lot of loans that are low credit scores, you bound to have, someone that's not going to pay. But if you concentrate on the loans that is, they're going to pay, then you're going to continue lending because you know what you're looking for. And
Okay.
I'm here to help anyone, but I want to have someone that's going to be able to make the mortgage payment. So yeah, lenders are lending. Banks, let me tell you something, big banks like JP Morgan Chase, and they actually, they changed their guidelines. They want
Why?
20% down, and they want 700 or 720 credit score off the bat. They don't care who you are. They say, hey, we're going to change. So big banks, they don't want to even touch it. If you have a 660, 680, or, they just want high credit score, big down payment. They don't want to get into MI companies, to insure the loans. They made their changes. Us as a mortgage bank, mortgage lender, we're continue being aggressive, closing loans and helping someone. So yeah, I mean, we're open as usual, business as usual.
So, for anyone who's maybe not fully either familiar with Jose or with me yet, one of the reasons that I've worked with Jose for a long time is that he's 100% black and white, but also he's resourceful when it comes to getting loans and programs for clients. And so if he tells me that somebody can qualify, then you'll be able to qualify. If he says this person, I can't get them a loan, chances are that's the reality, because we've ran into situations with other buyers that nobody else would lend to, right? Because of their situation, because they had a bankruptcy in the past, a foreclosure, because they got divorced, because they started a new job, because of any number of different situations. Just imagine a fruit salad with everything in there. I mean, we've had all types of different situations, and what he's saying is absolutely true. Like, the big banks are definitely raising their standards super high, where they'll lend to you if you have perfect credit and nothing terrible and big down payment and extremely great income. They'll lend to you. It's what is it that's called, like vanilla, like what's it?
Oh, a paper, walk on water, vanilla loans. Yes,
Walk on wire. So
yeah.
basically, you have to be perfect, right? But for the rest of people that have had some type of issue, which I think most people have had some type of issue, maybe a late payment on a credit card, some medical bills, some type of collection, bankruptcy, foreclosure, even if it wasn't just yesterday, but if it happened 5 years ago, Jose would probably be able to make it happen. And if he can make it happen, it'll work. And if he can't make it happen, he'll tell you. And it's better for you to actually to know that in advance, instead of going through the motions and wasting time looking for properties, sometimes even getting an offer accepted, spending money on an inspection, appraisal, association application. Before you know it, you're $1,000 into it, and then the loan gets rejected with somebody else, and those $1,000 that you spent are not going to be refundable, right?
Oh, no, 100%. And this is how we built our reputation. I don't care how much money you have made in the past, or you're a top producer. It all counts what you do now. So I want to keep my name intact, and I say, hey, I don't want to wait. I don't want to do a loan to someone to spend money on appraisal, inspection, survey, association approvals, condo questionnaire. When you add that up, it's more than $1,000. So if I know this person can qualify, and this is the main challenge, main problem we see sometimes in our lending industry, like with banks and mortgage brokers and mortgage lending, analyze the approval now. If the real estate agent is saying, hey, I need approval now, tell them, hey, give me a second. Let me find out. Let me read the guideline. Let me see if this person is able to qualify. Because if I give you an approval letter, the real estate agent is going to take it. It's going to submit an offer because he thinks, hey, we're good to go. We're good to go. He gave me an approval letter. But sometimes giving an approval letter, it doesn't guarantee that buyer is going to qualify. I like to review my documentation, my last 2 year taxes, 1 month of pay stubs, credit. I like to analyze it. You have to know the guidelines So when I come back to you, Juan, hey, you're good to go. Here's the DU approval, which stands for Dex-Up Underwriting. It's a system that we run in our system, and we actually, documented that, that this approval is legit. I want to make sure that when you give me that contract, we're going to do inspection, appraisal, survey, everything that we have to do so that, we close on time. On time. We don't want to get, I hate getting, I don't want to get extension. Once I get a contract executed, to start now and close it in less than 30 days. And that could be VA, FHA, conventional. A lot of people blame FHAs that are bad loans, that are low income buyers. That's not true. That's not true. It's the lender knows how to originate and knows how to process and work in a government loan. If you're good at that, it doesn't matter what loan it is. You can make it happen. It's one underwriter. The underwriter's going to underwrite conventional FHAs and VAs. You just got to know the guidelines.
Right.
That's I'm telling you, that's the truth, guy.
Preach, brother.
Plain simple. Don't blame FHA. Don't blame the underwriter. Loan officers.
Is the loan officers. Okay.
Do it right. Do the ratios. Don't blame the buyer. Call, communicate, and have Mr. Buyer tell me the truth. Tell me what I need. Help you take it to the goal line.
Sure. That makes perfect sense. So let's actually switch gears a little bit. So yes. FHA is FHA and VA are let's say somewhat similar guidelines, right? Not identical, but somewhat similar. But on the opposite end of the spectrum, we have jumbo loans, right? Yes. So talk to us a little bit about jumbo loans and where they stand today.
I mean, jumbo loans is a loan that is above $510,400, which is the Fannie Mae conventional maximum loan amount on a single family home. So everything above that, it becomes a jumbo financing. Okay. Which, they're being done, actually that's the people that are looking for $600,000 home and up, or $1 million. That's jumbo financing. It's not securitized by Fannie Mae or Freddie Mac. So whoever's lending, we lend on jumbo financing. They made some changes after the Covid-19. Some lenders, they get scared because, hey, if one jumbo loan defaults, we're talking about, $700,000, $800,000 loan amount. And they get a buyback, that could really hurt the mortgage company or the bank. So imagine having a couple of those defaulting. It's a big hit. So they made a couple of changes. The way we're doing now on jumbo financing, we do a first loan, a Fannie Mae loan amount, let's say $500,000, $510,000. That difference, we give them a second mortgage with a HELOC, with a home equity line of credit.
Okay.
And we give them the difference, and the buyer can put 10% down, 15% down to be able to accommodate that jumbo financing and have no PMI. So the payment will be a lot lower. So those are the things that we get, we get creative and be able to combine two loans on a jumbo financing. Because some jumbos are making changes. They're asking for more reserve. They're asking for 6 to 12 months reserve. The debt to income ratio is very like a 40% or less. So the guidelines, they become very, very strict. So in order for us to be able to accommodate and help the jumbo buyer, jumbo financing, we'll give them a first loan and we'll give them a second mortgage with like a line of credit. So
it's interesting that you say that, because recently I was talking to somebody who works in the medical field, and sometimes people's just preconceived ideas, right? We all have our biases, but you think, like, for example, we were talking about a doctor, right? So imagine, like, immediately people think, oh, this person's a doctor, they make a ton of money, right? And so yes, as long as, and we're thinking of this particular doctor, as long as he can see 50, 80, 100 patients a day, which right now he can't, right? So right now so usually he does make great money, but again, as long as he sees 50, 80, 100 patients a day, 5 days a week, 4 weeks a month, right? Then he makes great money. But for the last 4 to 6 weeks, his practice has been closed. Right? That means that even that doctor, that's a high income individual with probably, maybe an excellent credit score, maybe a strong down payment, and last year and the year before, excellent income. Right now, his finances have changed. So would you say that that has had, that's affected some of those changes for jumbo loans and for, how lenders are kind of pulling back a little bit?
Well, and that's what I was explaining. They're looking into more of their finances. I mean, a self-employed borrower that maybe had done well 18, 19, maybe started doing good in 2020. Then, as long as they had the reserve, obviously reserve means down payment, closing costs, and at least 6 months or 12 months reserve. So the bank is going to say, you know what, he has plenty of money to be able to go through, make the mortgage payment, and he's not going to default because they make a lot of money. Maybe his taxes were very good, and the problem with self-employed buyers sometimes is that they don't declare enough. That's their main issue. That hey, they make good money, but you know what? Let me put a lot of expenses so I can pay less to the IRS. So sometimes they have a problem qualifying because of that, and that's why they have all these other loans with bank statements only. Data, which they had right now at the moment, but some of these lender portfolio loans are on halt after this COVID-19 passed by because those loans are not securitized by the secondary market. But yes, I mean, but a W-2 doctor that is working could get a loan. That is working at a hospital and it's working full time
as an employee. Let's say
as an employee, as self-employed, we just have to see how they're doing right now in their financing. If they don't have income coming in, then that could be a problem. Yeah, we wanna prevent that. Yeah.
Yeah, and we have some other clients, for instance, that are also in the medical field, and they typically made great income, but right now the company that they work with basically lowered their salary by 30%, and they lowered their time by 30% because they work in surgery right now. Elective surgeries are non-essential, and so they took a hit. So they didn't lay them off, they didn't furlough them, but they took a drastic cut. And so if they need to get pre-approved right now, it's not so much that they can't, it's just that it may affect their situation. So
no, it does, and you mentioned it. I had a situation once. A borrower was ready to close, but she's furloughed. She's not working because her business is is doing nails. It's doing so you have to see people coming in. She works with whoever comes in. That's her service. So she's not getting an income. I couldn't get the last pay stub, the most recent one. So banks and lenders are asking for the most recent pay stub, and they're doing obviously the COVID-19 verification of employment, making sure that you're still working, active. That doesn't mean that when you come back, you're not able to qualify. You're able to. We just have to verify, like you said, they're earning full-time hours. They're working back. So once we do that, that little gap of employment is not going to affect them. But we have to make sure that they're working back and they're making their full 40 hours. Someone that is making less money, less hours, I will wait for them to get back and get the full 40 hours because it's less income that they're getting.
Totally. And some of these situations that Jose is mentioning, I mean, we've literally experienced them in the last 4 to 6 weeks. We had a deal, for instance, that was about to close, and usually a closing takes about 4 weeks. We're about 1 week away, and when the lender got to the verification of employment, unfortunately the person had been temporarily laid off,
right?
And the deal fell apart. So for anyone who's thinking of selling right now, if you're trying to sell on your own, I highly recommend getting a realtor, a good one, like somebody that I know.
That's you.
No, but all joking aside, if you're thinking of selling a property, make sure that you don't just sign a contract with the first buyer that shows up. Make sure that you pre-screen that buyer, right? Either send them to Jose, get confirm that in fact that buyer, because what happens is that buyers could be shopping today with a pre-approval from February, right? And so maybe it was current, it worked in February, but today their situation changed, last week. And so if you get under contract with them 2-3 weeks from now, the deal's going to fall apart, and you don't want that. So it's better to wait a little bit and make sure that the buyer's actually qualified, that they have a job today in the middle of the pandemic, and then be able to actually close.
No, you said it right. And I want to mention there's easy steps how to, buy a home. There's a process. And as a homeowner, whoever's listening to, do your research online, look at homes, there's plenty of website that can show you, what homes are out there. Second step, get approved. Don't get pre-approved, get fully approved. What I mean about that is say, hey, give them all your documents. Don't just say, hey, I have a good credit, I make this much. Give the documentation to whoever is working with for them to give you an approval. Okay, if they give you a pre-approval, it's subject to very vague, open, and I know a lot of lenders don't want to commit, but if whoever's working with a lender, they have to commit to you. Hey, based on this information, you qualify this much. Okay, if something happens out of their control, then of course, they lost their job, they did something that we're not supposed to do on their credit, they go in and buy a car, a boat, then obviously that's not in your control. They obviously it's not currently. But yes, do an approval. After that, go to your real estate agent, like Juan, and he's going to send the best offer so you could get that contract. Because once that contract comes back to the lender, comes back to me, then we rock and roll. And all I have to do is go ahead and submit it. I already have the documentation, execute a contract, go ahead and order appraisal, goes to the underwriter, and that's how you make the loan work efficiently and close on time. There shouldn't be any hiccups.
Yeah, totally. And again, just to reiterate, and I know we sound like a broken record, the lenders are still lending. The thing is that they're lending to those people who can actually buy today. So
Yes.
if you're in a situation, if you're watching this and you're a buyer, you're a renter, right? You're thinking of buying, you've been in the process, you've been looking, whatever the situation is, it's find out if you can actually qualify today. Just because you can't qualify today doesn't mean that you won't qualify in maybe 3 months once you get your job back, once you get reinstated at your job, once you get picked up again, right? Like but it's important to don't rush the situation, because the lenders are still lending. They're just going to lend you as long as they feel comfortable that you can pay that loan. And trust me, that's exactly what you as a buyer also want. You don't want to get all this money that you're not going to be able to pay back.
Of course, no, definitely, yeah. And also, if you have a listing, you want to tell the seller, hey, we have a great buyer that is, once you take that property out of the MLS, out of the market, he wants to feel confident that, hey, this buyer is fully approved. I'm confident that my agent is able to get the best buyer to be able to close on my home, and maybe that seller have to maybe purchase another property or maybe leave out of town. Right. Whatever goes to the buyer, the seller also going through, their plan, their financials. They need that money to be able to buy another home or leave out of state. Maybe they're getting relocated. So I always like to look the other side of the spectrum. What's going on with my buyer and what's going on with the seller. So at the end of the day, I want to have a relationship with the listing agent that, hey, there's a trusted lender that is going to help your listing sell fast. So that's a reputation you have to build. And right now, more than ever, we need humans. Us, real estate agent, and a lender. You don't need robots. You don't need that. We use technology, very good, but you need someone that's going to answer you, pick up the phone on the weekends, send you a text, because this process could be overwhelming. And if you have someone that don't explain to you the process, then anxiety comes in.
And you're 100% right. And I know we make it sound like it's overwhelming, and the truth is that it can be if you're trying to figure it all out on your own and you don't have somebody to sort of hold your hand and walk you through the process. Because if you do, then it's really not that complicated. It's just it's a very simple process. But if you're working, for example, and this just happened to me literally this week, I have a listing that we're trying to sell. Fortunately, we've actually been getting a lot of activity, and I think it's just a matter of, I want to say maybe we should be getting a contract within the next 5 to 7 days, just because of the level of traction that we're getting. But anyway, an agent called me and they said, hey, Juan, my client wants to see your property, this listing, and my listing is owner occupied. So I said, sure, no problem. Send me your email and I'm going to email you, the full information on the property, like 50 something pictures, interior, exterior, aerial pictures, full video walkthrough, 360-degree virtual tour of the inside, like the works, right? I want you, the other agent, the buyer's agent, I want you and your client to be fully informed, to be able to make an informed decision. And the other guy, nice guy, but I could tell that he was new because I've been doing this for a little while. I could tell that he
Yeah.
was new. Like again, been there, done that when I first started, right? Brand new agents, all they want is to like just get that first deal under contract, right?
That's it.
And I could sense it in his demeanor in what he was telling me. So I said, have your client take a look at this, let me know. And I could tell that he was very eager. So he said, no, but my client wants to see it. And I go, look, do me a favor, have your client watch everything. And if they like it, excellent. Just let me know and we'll set up a private showing for you. Yeah. Finally, allegedly, the client saw the video, they came back, they're, yeah, we want to see it. And then, okay, we're going to show it, I think it was Saturday, like at 10 in the morning. And so I confirmed, always confirm. If you're trying to sell a house on your own, always confirm everything and double check and triple confirm. All right. A lot of things happen behind the scenes in real estate that most clients don't notice. But anyway, so I confirmed, and then he's like, hey, Juan, listen, what happened was, is that it turns out the client is not pre-approved. They had an issue in their credit and this or that or the other. Long story short, is that we never actually showed them the property in person, but the buyer's agent was so new that he hadn't actually checked with the buyer to make sure that they were pre-approved. And so if you're working with an agent that's inexperienced, that's going to be a problem. They're going to go show you some properties. They're going to get you under contract. They might actually get you under contract, and then you're going to spin your wheels, and then eventually you're not going to be able to get approved. And if that happens, you're going to be upset. You're going to blame the realtor. You're going to lose money, and it's not going to be good.
No, and then this is the negativity that happens. Oh, real estate, it's hard. Banks are not lending. This is when the negative comes in, and it's not that way. It could be a lot easier, simple, following steps, following procedure. And if you're brand new agent, then I would suggest to always, have a mentor, someone that could train you for the first couple of deals. Listen, I was making the bare minimum when I was originating loans. So all I wanted to do is learn. I didn't care. I said, listen, if once I learn and I get this right, I'm going to be the best at it. Because why? Because I learned from someone. I shadowed someone. I said, what are you doing? Let me see how you do a loan estimate. Let me see the contract. Let me read it. Let me read that appraisal. Let me look at that closing document, the HUD back then, the HUD 1. And let me analyze. I was so eager to learn before I go ahead and I made mistakes. I made a lot of mistakes, but I was able to fix it right away because I was learning through what I was doing, and I was learning with someone that, hey, do this right, and you're gonna be successful. Right. So for any real estate agent, loan officer, anything that you do, if you're eager, which is good, right? It's great. Have that, you want to work, but learn the business because you hit the wall and you're gonna get frustrated and you're gonna be out.
Yeah, totally. And then, the worst case scenario is that you do make a mistake as a new agent, you make a mistake and then it costs your client money, which knock on wood, so far it hasn't happened to me, but it does. I hear all the time. It happens to brand new agents that are so eager, so excited and don't have a mentor that, you end up screwing up the first deal and then there goes your reputation. And then, trying to come back from that is it's not going to be easy.
I always said that the negative, reputation, it costs you $100,000s of dollars.
Yeah.
You could close 100 files, 100 loans, 100 houses, but if you screw one of them, the negative takes over that positive. It's just
totally.
That's life. It is what it is. It sucks, but that's why I'm always, let me look at it again. Let me look at it again. And if it's a go, then it's a go. If it's not, then hey, let's work on it again. Let's get somebody else in the loan. And let's fix his credit. Why don't we get more income? You have to have it right because at the end, the outcome has to be you were able to help someone and you close.
Totally. And it's funny that you mentioned that. I guess to kind of wrap it up, for anyone who's watching this, Jose is a loan officer. I'm a realtor, right? I'm a broker, and our business is 100% results oriented.
Yeah.
We don't make a dollar until we can actually successfully 100% close a deal. So if Jose tells you something about, you can't qualify for the loan, you cannot qualify for the loan, trust me, he has a vested interest in making it happen. If he doesn't make it happen, he doesn't make any money. And we like to make money because that's how we pay our bills. And so,
Oh yeah.
if I tell, sometimes I'll tell, buyers, listen, I don't think you should do that. And usually with a buyer or a seller, sometimes a seller, listen, we're too expensive. And I know it's too expensive because it's not going to sell. And if we don't sell, I don't make money. The client doesn't get what they want. Nobody gets what they want. And sometimes I think sometimes professionals have a hard time saying the truth to their clients because maybe they're afraid the clients are not going to like it. I get into it the same way because sometimes, I'll tell a seller, for instance, I don't think your property is worth that much. We need to be lower, which I know is not what sellers want to hear, but it's the truth. And same thing with buyers, right? Sometimes I tell them, listen, we're not going to be able to, based on the market, based on the information, based on this property that you like, if we offer that much, I don't see a realistic chance that we're going to get it. You're going to lose out. You're going to miss it. We need to come in at a full price or offer a little bit more. And anyway, what do you think of that?
I think it's great. I mean, I think that having that experience and explaining, listen, we're here to not to be your friend. Believe me, we're here to give you the best advice so you can have that win-win situation and have your outcome. The problem with, in our industry sometimes, no, because this client's a good client, he's my friend. Yeah, but remember, you're doing business. You know, when I do business, I say, hey, I'm not trying to be your friend. I'm trying to be the best asset for you to be able to close and you be able to move into your home or refinance, anything that I'm doing the financing. But I tell them from the very beginning, I'm here to help you. We could be friends after, hey, you close, you want to invite me to the barbecue or anything like whatever. But right now you have to listen to me because
Right.
I'm the asset that's going to take you to the finish line. And same thing with you. You have to tell them the truth. Hey, this listing is overpriced. If we go this amount, it could sell faster or it could take longer.
Right.
So you're giving that advice. You're not trying to be an enemy. This is the truth. And hey, but what I always tell my loan officer and people, don't try to be their friend. Try to be the best asset, give value, so they need you. When they call you, hey, Jose, give me the best advice. What do you think? This is the best advice.
Right. Yeah, 100%. And if you're watching this and you're a friend of mine, which I work with a lot of, friends and referrals and friends of friends, like Jose said, friendship is friendship, business is business. And what I tell, if you're going to work with a loan officer or a realtor or any type of professional, let's say, and they're a friend of yours, um, if they're professional, then go ahead. But if you're just working with them because they're your friend and they do loans, real estate, haircuts on the side, just part-time, right? We're just talking about, my self-inflicted haircut that I did the other day. You want to work with a professional. And so when I tell my friends and clients and anyone who's watching this is if you work with me, you can expect that I'm going to treat it very, very seriously. And otherwise, I expect to get fired. I expect for you to fire me because I didn't deliver on what you hired me to do, whether we're friends or not. Because if I deliver good service, if I deliver the result, we're gonna stay friends.
Yes, exactly.
If I don't deliver the results, not only are you not gonna get the results, but we're probably also not gonna be friends. And so far, so good.
Guaranteed. And they're close with somebody else, and then you see it on Facebook. Oh my God, they're close, but I thought we were friends. No, it doesn't happen that way.
Right, right. Anyway, Jose, any last thoughts? I know we've covered a lot, like in this almost hour, I think that we've been talking.
Oh,
Any
wow.
last thoughts so far on your feel for the market, for mortgages, for what you see coming, let's say in the next month or two?
Well, I mean, the good thing is one that COVID-19 it has made us more efficient. We're using technology. We have our own, mobile app platform that could, pretty much see the whole loan process, digital, runs credit, it gives approval. So using Zoom for buyer's consultation with my real estate agents and my loan officers, if you stay in touch and you use communication every day and you follow up and you're consistent, because a lot of people think they're on vacation. No, you're not on vacation. You got to work. You're home, but you have to work.
Right.
So when you take those actions, Juan, every day, I'm telling you, you're gonna have at least 2 or 3 loans in the pipeline, or maybe 2 or 3 listings, 2 or 3 buyers. From the morning to the afternoon, I'm consistent working. If you take that action, it doesn't matter where we at right now. I'm more busy now than before, because I told myself, if I'm going to come out of this better, and my team, we have to be active every day. I don't listen to the news. The news is gonna make you depressed. There's a lot of people depressed. This is serious. There's a lot of people depressed. There's a lot of people stuck, and I'm telling them, agent or loan officer, listen, help someone. And I always tell them, if you need, I can help you. I can tell them what we have to do. But there's a lot of people that are stuck because of the news, the COVID-19, which it sucks. It sucks. There's people that are going through a rough time. But if you're able to get up every morning and work, do it every day. It doesn't matter what you do. Take notes, take the hits, call. Do that every day. Call someone on Zoom, phone, text, email. We have the technology now. There's no excuses. So moving forward, I think, 2020 became that F year, but I think it's going to be the best year by the end of this year, because we are working. We are consistent in working. Unless something dramatic happens that I don't think is going to happen, but our market is still solid, and whoever takes the advantage is going to come out on top.
Okay, awesome. So to kind of summarize, interest rates are still low. Interest rates are expected to stay low for the immediate future, let's say. I mean, we can't predict the future, but let's say for at least the next.
So the next 90 days are going to be, the rates are going to be, they're going to maintain.
They're going to be pretty similar, right?
Yes.
A lot of people are still refinancing, taking advantage of the low rates, right?
Oh yeah, definitely.
Yeah. There's still a lot of people with plenty of equity in their properties. That's why they're refinancing, because they can refinance, right?
Yes.
No,
No, I'm sorry. Yeah, this is my notebook, and these are people that are calling me. They say, this is how much I owe. This is this is how much my property is worth. This is what I'm looking for. This is the rate that I have. Those are the notes that I've been having on a daily basis. And yes, I'm doing Facebook ads, and I'm doing social media. So you have to be out there. Keep promoting yourself. Keep doing your marketing, because things are happening. So rates are low. I think this is the best time to negotiate on a purchase. If you're a buyer, you're able to look right now and find a good deal. The prices are gonna keep adjusting, but it's not a crash. I don't see a crash. I see prices adjusted.
Yeah. And there's for anyone who's watching this, if you I literally just saw a projection of the median home prices in Dade County over the next 12 months. So from now, let's say May 2020 through the next 12 months, and what they're projecting is a 2% drop. Actually, it was like 1.9% drop. So for anyone who's thinking that the prices are going to crash 50% like they did in 2008, 20% in 2008, that's not likely to happen. Having said that, of course, we don't have a crystal ball, and we'll continue to monitor this. But based on the current inventory and the activity that we're literally seeing in the market, and the fact that the interest rates are still at the lowest they've been in 50 years, we're just not seeing that happening. And we still continue to get offers. I just put a property under contract today, as a matter of fact. So the market is moving. It has slowed down a little bit, but it's definitely still moving.
Yes, I agree, 100%.
Mr. Jose, thank you so much for your time. I appreciate your insight, your expertise, and we'll make sure to put all your information so people know how to reach you at the end of on the video. Take care of your family. Hey guys, thank you so much for taking time to look at this. To hopefully you find this valuable. And if you need to reach Jose, I'm sure he's happy to talk to you. All right.
Of course. Appreciate that, Juan. Thank you for the call. And you're a successful man. Continue, taking care of your family. Your family is great, and you're gonna do a lot better. You see, we're gonna do a lot better together. So let's continue working hard, and let's motivate people so they can go out and continue buying homes, educating themselves, and be a proactive buyer. So I appreciate that. Thank you.
Absolutely. All right, guys. Again, thank you so much, Jose. Thank you, and I will catch you on the next one. Bye, guys.
Take care.